Hey guys, what is going on? Welcome to the video. So the stock market continued its huge volatility this week as we saw continued downside and some of the biggest moves that we've seen yet this year. In this video, we're going to be going over what played out to trigger that large sell last week and what needs to happen this week to either end the sell or lead to continued downside, as well as going over the top long-term investment idea that I'm going to be going over and also some trade ideas along with that. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, last week we went over the 5560 to 5585 zone as the key pivot to watch and the spot where buyers needed to reclaim and hold above to trigger upside for the market. We also went over 5433 to 5453 as the key downside pivot, which if the S&P broke below there, it would likely see a much larger downside move. And what played out last week is it dipped on Tuesday, which successfully held 5433 as support once again, and got a strong rally from there all the way up to 5560 to 5585. It then spent some time consolidating there and attempted to break out above a few times, though failed to hold, and from there it broke back below 5560, which acted as the downside trigger after that failed breakout, and then led to the large sell back down to 5433 on Friday, and once that level broke, the market got that more violent sell due to the range breakdown. So into next week, 5433 to 5453 is the key pivot zone, and that must reclaim back above to open upside back up for the market. As long as it holds below though, expect further downside and any bounces back up to get sold. On the downside, 5320 to 5330 is a key zone to watch, and that is where it held support at lows on Friday. If it breaks below there, that would trigger further downside to 5304, 5272, and then some key zones below there at 5240 to 5247, and then 5193 to 5208. The S&P is slightly oversold once again, so there's a good chance for a relief bounce early next week, but like we went over, if that bounce does not reclaim 5433 to 5453, expect it to get sold back down. Alright, so now getting to some stock trade ideas, and starting out with a long-term play that is in my opinion the easiest long-term buy and hold in the market right now, and that is Amazon, ticker symbol AMZN. So Amazon reported earnings on Thursday after hours, and numbers weren't great, but there is really nothing to worry about or anything that would be thesis changing from those numbers. So taking a look at them, management guided to a sales range of 154 to 158.5 billion for next quarter versus the forecast of 158.43 billion. And they guided to operating income coming in at a range of 11.5 to 15 billion versus the estimate of 15.2 billion. Amazon also beat expectations on the AWS segment, which is the most important part of their business, and this is coming just after Microsoft reported a miss on their cloud numbers. Something to know with Amazon as well is management pretty much always sandbags their guidance. So what this means is they will give these ranges and then end up reporting numbers at the high end or above of their guidance range. It's always better to guide low and then impress for the stock than to guide high and then miss, which can lead to large drops in the stock price. So overall, earnings were not strong by any means, but this large of a drop is certainly an overreaction in my opinion. And in a bullish market, say these earnings happened like a month ago, I would bet that after these numbers, the stock would be down about 2 to 4% after hours, and then the dip gets bought the next day and the stock goes green. But we are in a correcting market right now, and overreaction drops like this can happen. Taking a look at some fundamentals for Amazon, so it's expected to really up the profitability in the next 2 years with free cash flow, expected to grow 57% and 28% in the next 2 years. Because of this, it's going to start looking very attractive to investors. After this drop, it's also trading at the cheapest forward price to earnings ratio that it's ever traded at. The stock could always see more short-term downside depending on what the market does next. If the indexes do drop more, then Amazon likely will as well. But Amazon would be my bet to have the best performance out of the mega caps over the next few years. So now getting into some trade ideas for the week ahead, starting out by taking a look at the Russell 2000 small cap index. So a few weeks ago, we went over the major breakout that was playing out for this index, which was triggered by the break above 210 to 212.2. This then went on to see a larger move as it ran up to 226.85 and then built out a 2-week long bull flag pattern. It attempted to break out of this on Wednesday, but was met with a strong rejection and failed the breakout attempt, which then trapped buyers and led to that large sell on Thursday and gap down on Friday. The gap down broke back below 210 to 212.2, so as of now the multi-year range breakout has failed as well. It's tested and held the 50-day moving average so far, but for the bull case to restart, buyers need to reclaim back above 210 to 212.2. If they are unable to do so, expect to see more pain for small caps. Breaking below 207 would trigger further downside, potentially toward the 200-day moving average next. And this chart is a must watch if you are trading any small cap stocks, as it would be smart to be ultra cautious if 212.2 is not reclaimed and held back above. On a positive note though, Mercado Libre, ticker symbol MELI, is attempting to break out of its 3.5-year-long wedge pattern after reporting very strong earnings on Thursday. This is a setup that we've been going over for a while now, and if this breakout holds during market volatility, it is a major sign of strength and can lead to a much larger upside move from here. The shorter term well-defined trend line is at 1750 and the long-term trend line is at 1730, both which would be key levels to hold above to keep this breakout intact. If it is able to do so, the next resistance and target levels above would be at 1800 to 1825, 1900, 1957 to 1970, and then 2000 to 2020 before new highs. During market corrections though, breakouts do have lower odds to follow through and hold, so there is a decent probability that it does fail, and if so, you will want to continue to keep this high on the watch list, as it would likely reattempt this breakout once the market pullback ends. And with buying the breakout, you can keep things simple by playing it with a tight stop loss, either below 1750 or below 1730, depending on how much room you want to give it. And overall, trading is about risk reward. In a market like this, say that there's a 60% chance that the breakout fails. In that scenario, you lose 2 to 3% on the trade, but in the 40% chance that the breakout works and does follow through, it is a major sign of strength in this market and could easily go on a 10% plus run to new all-time highs. So now taking a look at Tesla stock, ticker symbol TSLA, and this is a setup that we've been going over for a few weeks now. So the long-term trend line continued to act as the key pivot point, and this week it made a couple attempts to break back above it, though ended up failing to do so and broke back below on Thursday, which then triggered the large sell. This sell led to a move down to the key 200 to 207 zone on Friday, and this zone was the top of its 6-month-long range from January through June and triggered the breakout above it in early July. This zone also lines up with the major moving averages. The 50-day moving average is now slightly above, and the 200-day moving average is currently at 203.94. So this zone will be a major decision point for the stock. For the bull case, it would be important to get a stronger reaction from buyers here, which could lead to a scenario like this playing out, and it could also be the handle portion of a large cup and handle pattern. If it fails to hold this zone though, maybe it builds out a bear flag before breaking below like this, then that would be an ugly look for the stock and likely lead to a good amount of further downside. So a big do or die here spot for Tesla into next week. I would be looking for longs if buyers react strong here, and you could either play it with a stop loss below the 200-day moving average at 203 or so, or give it some more room with a stop loss slightly below 200. Such a well-defined setup like this offers great risk reward though, so this should be a very close watch for the week ahead. So that is everything that I'm watching for in the week ahead. Expect further volatility, but as always, volatility does provide opportunity, so always be on the lookout for that. I will catch you guys next time. Thank you guys for watching. For anybody interested in joining the private Discord chat below, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. Good luck trading the week ahead, and I'll catch you guys next time. Peace out.